Welcome everyone to the virtual panel for Accounting and Business Outsourcing Success Stories with Carr Ingram. Today's presenters are Greg Crabtree, who is a partner with CRI. He graduated from the University of Alabama. He is the author of 2 books, Simple Numbers, Straight Talk, Big Profits, and then Simple Numbers 2.0, Rules for Smart Scaling. He enjoys playing golf, and he has an Australian Shepherd named Winston. Greg, would you like to share a little bit about your background?
Yeah, thanks, Christy. So our firm was fortunate to merge with CRI about a year ago, and one of the things that is really nice in that we had developed a national and international consulting practice around our concept of simple numbers that I wrote about in my 2 books, and having the ability to tap into the CRI family across all the offices, it really has been a great connection, and really allows us to, kind of our focus of that consulting practice is to really help entrepreneurs run profitable, cash flow generating, wealth building businesses. And it's truly become a passion of mine to really see the entrepreneurs really get that return on investment that their businesses have the potential to produce and make an impact in their community.
Thank you, Greg. Our next presenter is Martin Copeland. He is also a partner with CRI. Martin graduated from the University of Alabama, so I am officially outnumbered in this presentation. He once rode along on a training run with a USA Olympic bobsled silver medalist. He enjoys canoeing the Boundary Waters and backpacking in the Rockies. Martin, welcome, and do you want to share a little bit about your background?
Sure, Christy, thanks. So been doing accounting quite a while, but I've had quite a number of roles during my career. I've been an external auditor for one of the larger accounting firms, and internal auditor for a pretty good size national company. I've also been a controller for a national company, as well as an outsourced controller. And then after doing that, I also worked with quite a number of clients as a accounting software implementation consultant, and I did that for a lot of years as well. So I do kind of have a tech focus, and I think you'll hear that come out in what we say today. So that's a lot of my focus is on the technical side of accounting, but I certainly love helping our clients and helping our clients be prosperous in their businesses.
Thank you so much, Martin. And I'll tell you a little bit about myself. I graduated from the University of Texas in Arlington and also the University of Florida. I enjoy watching Gator football, traveling, and I have 1 dog, Bella, the long-haired Chihuahua. My background, I didn't start out in accounting. I started out working in manufacturing and human resources, and accounting grew into it, and then went back to school, and ever since have loved helping clients learn how to build their accounting systems to give them the information that they need to run their businesses. It's been it's nice when I can talk to a client and I have some of the experiences of what they're going through at the time, which I think between Greg and Martin and I, we all have a little bit of that background, and it helps our clients to onboard accounting systems in a way that will be most effective. Well, now that we have gotten through the introductions, I'm going to show our faces. So we are going to have a very fun virtual panel where the 3 of us are going to share some of our experiences and things that we've seen. So these are things that we've heard from clients and potential clients as we talk to them about getting timely accounting figures. Businesses are in the wheelhouse of doing what their business is meant to do, and sometimes don't have the bandwidth to have their accounting prepared as quickly as they need to have it done. and get the results. Owners of the businesses are looking for financials to show the owner what they need to act on, um, in the present tense verb of acting. So Martin and Greg, do you have some examples of clients that you're working with CRI that you're able to step in and bring their accounting functions into a more timely reporting to owners?
Yeah, I would say one of the things, in our consulting practice, so I'm probably a little different practitioner than most, in the sense that I kind of start with the end in mind and go backwards. And so in our consulting practice, we're able to show people a picture of what is the data that you need to run your business, how to make it more profitable, how to get a good return on investment, how to speed up cash flow, and those things. And in that process of showing them the potential, a lot of times we identify the weaknesses in that data is not broken down in sufficient segments. It might actually be too much information that's insignificant and it's not timely. Revenues don't match with expenses, and a lot of it then starts to open up the ideas is, okay, well, if you want this more on a repetitive basis, to use this as dashboarding, weekly metrics, and those things, let's work back to and find out where the bottlenecks. And so, like Chrissy, you said you come from manufacturing. Manufacturing is known for the famous book, The Gold by Eli Goldratt, to find, what's the bottleneck, solve it, move to the next bottleneck, and improve the process. And what we find is in many of the cases of our consulting engagements, we have to then engage with them to, do process improvement. And sometimes we find that there's a lack of a capability, availability, capacity to do a critical component of a data process, whether it takes a human, whether it takes software implementation like Martin's used to. And those are fun problems to solve, because it really is great to see the client start to get that data that they need to make real-time decisions, because we live in a world where annual planning isn't sufficient. You've got to probably replan every quarter if you're going to stay relevant in today's business and as fast as things move.
So Martin, do you have an example of a client automating processes with technology that's helped to get them those timely figures?
Oh yeah, just so many times that we've been able to do that, and it was always helpful when we used the larger accounting systems, the mid-level accounting systems. Those were helpful to automate our clients, but we really live in a time that accountants should be enjoying, and I'm enjoying it, because the automation tools have just exploded for us in the last few years. We have adopted an accounting package that we use within our CAS operations in the firm. It's called Xero, but Xero has several connections. And one of the things that's really nice about the software we use today, we can just take, let's say on the AP side, on the bills side, we can take those bills and we can dump them into a piece of software. The software will read the bills, start the accounting process, push those details over into the accounting software, and now we've got the details. If we ever want to see those details, and accountants love details, so we can drill down into those details and see those original bills. And all of that starts as an automated process. It's amazing. But then on the flip side, where you're paying those bills, well, now there are tools that allow us to go in and they'll look at our accounting records and say, hey, don't you want to pay these bills? And we can give our clients the opportunities to come in and approve those bills right in the software, and pay those bills right in the software. And then those bills are sent out to the vendors, and the vendors get their payments on a timely manner. And now our accounting records in that area are just, everything has happened automatically. It's happened quick. It's timely. We can see it not at the end of the month. We can see it right now, immediately. And then there's some other automation things. I had one client that really had to worry about on the sales side, had to worry about sales taxes and identifying, based on where they were delivering their product, exactly what a local sales tax was. And in our state and some other states, there are sales taxes for police jurisdictions and cities and counties and states. And and they're different depending on where a product is delivered. Well, the software we use connects to a cloud-based database that knows, based on a delivery address, exactly what taxes ought to be collected. So had one client that it was a big deal. They were facing sales tax audits regularly. And so all we do is basically flip a switch. And flipping that switch gave them the exact information they needed for that sales tax collection. And it's simple. It just becomes part of their routine of creating those sales invoices for that client. And you can tell I'm a real techie. I have all kinds of tech that I can throw at it, but that tech is easy these days. It's not difficult. It's not the old days where you had to figure out how to make those interfaces work. Software is designed now. These parts and pieces are designed to integrate. So I'm excited. I get excited about it.
And the trend that we see is the fact that you're pushing the accounting function into the field, into the hands of non-accountants, because they're the closest to the transaction. And so if you design the system correctly, and I always like to say, the kid at McDonald's who presses the picture of a Happy Meal, he's done accounting, because that one action is accounted for. Here's the revenue by item. Here's the cost of goods. Here's the labor estimate. Here's how much change do you give the person back if they happen to actually use this antiquated thing called cash, to pay for it. And so what you're doing is taking those things out of it and then getting down to where the human interactions are the ones that are generally moving up, higher up the chain of skill set and capability. But the way to get real-time information, either daily or weekly, as a business rhythm needs, is to do those systems where you have an operational system, and then you have that connects to a GL system like a Xero. Those interfaces are so much better these days than they've ever been, and you've really got kind of the best of both worlds.
Absolutely, and it is nice when you see where you bring that technology forward and into the equation. It's hard to see it if you don't know what it's going to do for you. So I always enjoy it when you see the client at the end when they go, this really did save us a lot of time, or it got us really accurate data. But when you haven't used it before, it's hard to see that it's going to do that. Well, that leads us to our first polling question. So I'm going to put the polling question out for our audience to answer. And the first question is, do you feel that the delivery of your financial information is on a timely basis to make decisions about your business effectively? So I'm going to launch that question, and the answers that you can reply are no, sometimes, or yes. So we'll give everybody a little bit to get their answers in, and I'll leave that up for a little bit. And in the meantime, another issue that we all kind of alluded to is the owner. Sometimes the owner or the executive feels a lack of confidence in their accounting records. Sometimes it may also be that the owner or the executive is unsure of how to interpret the figures on the face of the financial or the accounting that's being given to them. Whether it's in the calculations being done or how the cutoffs are being reconciled, they have some doubts or they feel they need some help reading their financial information. Martin and Greg, do you have examples that you can share of how CRI has helped a client have the confidence in the records being reported and that they are reconciled appropriately? I think, Greg, you actually have two examples of two different situations where when you guys came in and showed them how to get those reconciliations done, it was beneficial.
Yeah, the first example, we have a 5-location retail client, and so they had deployed the software solution like Martin and I were discussing earlier, to where they had a point of sale system and they had a back office accounting system like a Xero, that was feeding into. The challenge is that as we pulled the data together in our consulting models and looked at it, the owner would look at it and say, well, my point of sale system says my gross margin is this number, but our models said a different number. And so it started to identify some differences and said, there was not confidence that something was wrong. And so as always, tell people, all the dead bodies in your data is on the balance sheet. And so you just got to go look at the balance sheet. That's where the dead bodies are. And if you get the balance sheet correct at the beginning of the period, the balance sheet correct at the end of the period, that is the essence of correct accounting. It's physics at that point. Well, once you know that, so we engaged one of our CAS team members to go look at that, and they identified duplication of data in the handoff process, and there was just an accumulation of bad data hitting the balance sheet. And so we help them not only clean up the history, but we designed the process to say, in 95% of the cases, this is going to hand off now correctly. And then we have about an hour and a half a month engagement where we just go in and double check and make sure, are there any anomalies in the handoffs, and do those reconciliations for them, because they don't really employ an outside or an accountant on staff. I mean, this is really the entrepreneur and their store managers that are running very successful business, but they're trusting the technology, and they just need that little bit of help from us to make sure that the data is correct. And now, I mean, everything is spot on, but the data is timely. It actually remained profitable even during COVID, and so that was really excellent. The other example was a client of ours that was a national service company, so they had contracts all over the U.S., different cities and different contracts, and they were in Atlanta. Our office is based in Huntsville, and so we were same kind of thing. We were doing our consulting, but we kept seeing bad data, things would change, and they kept going through bookkeepers. Every time we turned around, that person lasts 2 and 3 months, and they didn't understand what the word reconcile meant. It's like, and so it's like finally one day in a fit of frustration, I said, just let us handle it. And so this shows where sometimes it isn't about technology, it's about rhythm. And what we said was, you accumulate everything that your accountant would need to know and put it in a FedEx box. And every Friday it came out to us. We got it Monday morning. We turned it around, and by Tuesday evening, and the owner got the box, opened it on Wednesday morning to sign the checks. And that was the rhythm for 5 years. And we took them from having no idea of what truly their data was, and break even at best, to being very nicely profitable. They ended up selling. The reason why the engagement ended is they sold to a national competitor at a very nice premium, because they had good data to support what was going on. But that's a case where we didn't even need to get elaborate. It was just, hey, this is a really simple problem to solve, and it just needs rhythm and decisions, and you just got to stay on time with that process.
And Greg, I listening to you point out reconciliation, and I'll go back to my tech side and say our modern software, as part of that ability to reconcile those transactions, our clients need to know about their cash balances. That's kind of one of their key reconciling points. A lot of accounts need reconciling, but cash is so important to reconcile, to make sure we haven't missed anything. And now our modern software actually goes out to the client's bank accounts and pulls in transactions even on a daily basis. And so that leads to that rhythm, to that weekly, and in cash, in terms of cash, even daily recognition of what's happened in their accounts. And so we've got these tools that allow us. We got to get all the accounting side in, but now we've got the bank side that we can reconcile against. So the tools that we have to help our clients with those reconciliations, like Greg was describing, bringing those things in to our office, well, we have some amazing tools to help us with that these days. And so.
And those tools work with the owners to put it in a format, and the executives to help them be able to see those pain points or the things. We can help them to figure out, what do I need to be watching to know what's going on? Where are my profit points? Where am I losing money on a project that I'm doing? And that's where we like to get them to, because it helps them to run their business the best way that they can, and to act and make decisions. So with that, I'm going to ask another polling question. You guys are going to love this. So, what is the level of confidence you have in understanding the financial results that your accounting provides to make better management decisions? And I'm going to launch that question. There's a few more answers to this one. Not confident, not sure is neutral, somewhat confident, and confident. So I'll give you guys a little bit of time to answer those questions. I'm trying to make sure everybody's paying attention. No, I'm teasing. So, you know, one thing that I notice as you start to work with a client and help them with the different pieces of the business, you know, is that interplay, because HR, that is my, you know, my first career, you know, is a staffing level need. You know, any business, they need different levels of understanding for different issues. And it's not 100% at the CFO level, and it's not 100% at a staff level. And every business has all kinds of types of issues in accounting, finance, budgetary, integrating their IT systems to get the accounting to the data to move. And when a client works with us, do either of you have examples of where that level of expertise has been beneficial working with an accounting firm to be their back office?
Yeah, I mean, I can talk about some of those. I mean, we've got we do a lot of work with some clients that are in specialized industries, and a lot of those clients are in the long-term care industry, and they need to know, uniquely need to know where they are spending money in, and are they spending monies in the right places. So you know, a normal organization, you think a lot about cutting costs. You know, your big win is you cut costs and raise revenue. But to raise revenue in some specialized industries like these, you really have to be sure that you get your cost allocated to the right places, because your revenue or reimbursement from Medicaid and Medicare is directly related to what categories you spend money in. And you get more reimbursement spending money on, well, in this case, on patient care than you do for spending money on back office activities. And so you want to see that information. You want to get that information into the hands of management, and you want to help them understand what that means to their business. And so those are huge wins we get out of our services, our folks that understand those categories and can advise those clients about how best and where best to allocate their resources in their organizations.
Yeah, you know, and I think every client that comes to us, I mean, the first thing they're looking for is they're flying blind for the most part. You know, and the first thing they hear about is, oh, well, I need industry data. So, well, industry data is okay, maybe, but there's a lot of flawed industry data, and to a certain degree, as a lot of times we'll aggregate data of client industries or client models, you know, ourselves to get some insight as to what do we think are the best practices. Industry data is pretty much going to give you the median performance, and so it's like, why do you want to perform to the average? I mean, I want to be exceptional in what I do, and so I always warn people to be careful about industry data. What you really want to look at is conceptual comparisons to other businesses. If I'm a service business, compare me to another service business. If I'm a manufacturing, compare me to a manufacturing business, and so on. And then what we find, though, is our clients who make the greatest step forward is taking the business and doing what we refer to as the profit cube. And so you take a business and say, here's the business in total. Here it is by line of business, by location, by region, by salesperson, by team, by client, by SKU. And so the key, and this is a lot in the data design, is are you tagging the information in the most correct way? I'm not trying to, in many of these cases, get to a bottom line net profit number. I'm trying to get to a margin creation number that is various levels. You know, is it revenue minus cost of goods to get to gross margin? Okay, that's level one. Gross margin minus direct labor, that's contribution margin in our simple numbers definition. So that's level two. Can I get to a unit margin? You know, that's level three look. And then the super value that we now see is not only am I connecting the margin to it, I'm connecting it to the trade capital, which are the AR, the inventory, and the AP, to look at capital efficiency of that particular business unit compared to another one. And when you can get to that level of analysis, you've got superpower tools that you really get to make some really clean decisions. Now, sometimes they're painful decisions because something that is not as profitable as you thought, and other things that you thought, oh, this isn't a good business line. I'm going, no, wait a minute, this is good. Do this every time you can do it. And it's like, but these are things that we see every day in our consulting practice that literally, like I said, it goes back to this: do you need help in terms of tagging, organizing, and accumulating your data to get this on a repetitive basis, so I'm not spending so much human effort to get it when I need it.
Yes, and then to tag on to that, Greg, when we're able to do the accounting and speed up and automate how we're getting all that the accounting data in together, it does free us up to help with more of the analysis, which is really what the owner, the executive, the person trying to make those big picture decisions about where the company needs to go or what's the next thing that they need to do, it helps them to be able to get the data they need in the format they need. So like in our office, we may have a staff accountant that's helping with getting that data in order, 2 days a week, and they may need me, 1 day a week, come in for an hour or so to come look at things at top level and figure out how to get through, problem solve through an issue. It gives you just what you need right at the point you need it, and tends to be more effective than having that company hire an accountant internally that may only be able to do so much, and because of the level they're at. Or if I think you're the one who told me the example of the CFO trying to do the bookkeeping.
Yeah.
That's not using them at their highest and best use.
Yeah, that's working way down rate, and typically those folks aren't. That's the last thing they do on their list of to-dos. They're going to gravitate to the fun stuff, and so you kind of do it at the last minute, and you cut corners, and it's like, yeah, you got the data, but my staff hears me talk about this all the time. I said, when we pick up books and you see this year-end distortion, this is kind of one of my pet peeves with data. It's like January and December data is absolutely unusable from an analytical standpoint because of year-end adjustments in the traditional accounting world.
Yep.
It's like that shouldn't be. I mean, I'm a believer, if you read my books, I mean, I'm a huge believer in this concept of rolling 12, rolling threes, and monthly. Every month ends a 12-month accounting period. I could care less about January to December, and I never care about year to date. Year to date is the only value of year to date data is to calculate my estimated taxes at the moment on an actual basis. Outside of that, it's an irrelevant accounting period. And so the idea is once you get that discipline in there, and like you said, Christy, if you have reliable data, the decision time is a fraction. It's I can look at a data set in 5 minutes, figure out, okay, here's my action. I didn't need to chew on it for hours on end. It's the hours on end is where you're questioning that. I don't know that that's right. Well, did we think about this? And those are just energy zapping, discussions versus, okay, here's the truth in front of us, guys. What are we going to do about it?
And I think we've been our own worst enemy as accountants in this area, because we'll tell the clients, okay, just do what you can do, and we'll come back in at a later period and we'll clean everything up. Well, yes, but then the client didn't know as they were working through their week-to-week and day-to-day operations what was really happening, because we've taken on a role, an after-the-fact role that we shouldn't be taking on. We should be helping them use the technology and telling them, okay, if there's an area that you need some help with, let's touch it for just a short period of time. And then you've got that accurate data on a day-to-day, month-to-month, week-to-week, and not just month-to-month basis. And the tools are so much better that allow us to do that now. I mean, in our old world, about the only way you could do it. was at the end of a month or a period. That's not true now. We work together with our clients using our software tools, and it just happens on that rhythm. And it's real time, it's real information, it's up to date, and it's usable, actionable management information.
Yeah, a good example of that, and you don't think of a lawn care business as being sophisticated. And one of our clients in Austin, Texas, and I love them as an example. It's a super well-run business. But their mowing team goes out, and as soon as they finish mowing that yard, they pull out their phone, call up the app. They use an app called Service Autopilot that helps them manage their projects. And the guy who mowed the yard clicks done, which immediately bills the customer for the yard that just got mowed, gives the traffic coordinator at the office who's checking in pace throughout the day of their teams to make sure they're mowing enough yards in that day. So they've got both operational management information, they bill, collect that day for everything that gets done. And they're mowing yards. And it's like, why isn't everybody doing that? That's not an accountant who processed that bill. That's not an accountant who updated the ops manager of where they stand in the schedule.
Absolutely. With that, I'm going to put out another polling question for everyone. And let's see, this one is, would you agree that having an accounting firm bring the right talent for the specific level of an issue at hand would make solving those issues more effectively dealt with? So I'm going to launch that question. It is a yes, neutral, or no answer for those questions. So if everyone would please respond to the questions on your screen for the poll, we would appreciate that. And I'm going to move on to the next area that I think is very relevant for today, and interesting to talk to people about how much it's changed over the last year. All three of us on this call are very comfortable with working in an online environment with clients. We've all three been doing it for a while. And it's also known that the accounting industry as a whole has been moving towards online environments more and more with all the advances we have in technology. So as more businesses are faced with pivoting to a remote working environment, let's discuss some examples of how those businesses have leaned on us more than ever to make bigger changes in their businesses to utilize the technology to make this happen. So, Martin, I think you have an example of a payment approval and check signers, and a COVID-related situation too. Would you like to talk about those?
Oh yeah, sure. Yeah, COVID has definitely awakened some of our clients that were thinking much more about in the past about just keeping systems in-house. And really, when we look back just a short ways into technology, that was the only way that we could do things. Is we had to install software in a client's office. That's how it worked for accounting software, and that does not facilitate remote work. And a lot of a client's staff have been out of the office, right? They've been working from home. Our staff's been working from home in a lot of cases. I think we're all in the office today, but I've got a home office. I sit there and do accounting work all the time, and I know we all do. And our clients are beginning to see that, and if we don't have those systems in place, then, and if the clients don't, then they can't do that. And so I like to talk about those clients that we've helped, even during the middle of the crisis, move their systems out to the cloud, and how that has helped them to continue their operations during COVID. But it's also a situation where lots of clients have been involved, and I know Christy has an example that she may tell us about later, but hurricanes and tornadoes and other natural disasters are just like COVID in terms of, how do we deal with the fact that we've got in-house systems the only way we can do anything is come into an office. Well, what if the office isn't there? Or what if we can't go? What if we're not allowed to go? And so moving these systems up to the cloud does that, gives us remote access, but it also answers another problem. And the other problem is if we have in-house systems, if our clients do, then those clients have to be responsible for disaster recovery. They have to be responsible for backups. They've got to be able to restore their systems themselves or with break fix people when a disaster hits or when a pandemic hits. And that's no longer necessary as we take advantage of the tools that we offer our clients and offer them to work together with us to use.
So I'll share my example. We have a client that came to us because they're a resort that's on an island, and all of their accounting records were on that island. And it is in a hurricane typical area in the Caribbean. And they came to us and, they wanted to get their accounting system off site, off of the island. They also were limited to the bookkeeper, the only bookkeeper that worked on that island. And they knew that they needed to automate their systems, and there had to be a faster way to get all of the accounting done as well. So they came to us and we moved everything off site. We made it remote. Their general manager, he does accounting in it, and we do also. We split up the duties and helped each other. And like probably about 6 months after we transitioned it and moved it off site, the island was hit by a Category 5 hurricane. And once he got to a couple days where he got cell service, because he was on the island when it came through, he called me from the top of a mountain on this island and said, "You have to take over the accounting for a while." And it worked beautifully because we both knew what was going on inside of the accounting system, and we jumped in for a while and did more of the work because they had to get situated and figure out the plan to get themselves out of and get recovered. And because we were able to jump in, we were able to help them cash flow and get through that situation, because he knew every day just right where his cash flow was because we were keeping up with it. So it's a good example of disaster planning, and a good example of making sure of keeping access to your accounting systems accessible to someone that isn't in that area that you live in, because disasters can happen anywhere. So, Greg, do you have any examples of that?
Well, I mean, one thing on that point is, you see this happen a lot where, you've got one significant main accounting person for a business, and, that's a single point of failure. And when that person walks out the door, and sometimes it's not that they're quitting, they get sick, things happen and they're out. And so we become kind of the backup source. And when we're doing some level, we may not be doing the total outsourcing, but they've designed a remote accessible systems. They got good processes. It does make it to where all of our teams are, we're on call to be that fill-in to keep things going, and make that that thing happen. And that's really one of the reasons why being in cloud systems, not physically on presence bookkeeping systems that are behind firewalls. We've run into a lot of issues where whether it's a point of sale system or some type of ops systems, those things don't work really well with a server-based system. And so with newer cloud systems like Azure that have good APIs, to connect, it's just much more robust, much safer, backup, environment in that regard.
Absolutely.
And much more robust too, Greg. Just we really can't expect our clients to have the highest level of backup and the highest level of data security and the strongest antivirus and anti-malware. They most of them can't afford that, but when they move to the cloud systems, you get that, and you're much less likely to be hit with a system outage of any kind, whether it's a ransomware or whether it's a virus or whether something just breaks, right? So, there's huge advantage in moving those systems and letting some real top level professionals deal with those issues instead of the guy down the street who we love, but he just, they're just outclassed and outmanned by the threats that are occurring against our IT systems these days.
Yeah, no doubt.
So I tried to save the best for last. And because I also know that the three of us could probably talk about this for an hour. It always tends to creep into the conversations because of how critically important it is. Businesses need to have the appropriate internal controls in place to first function well, and then to also help prevent and deter fraud. I'm sure we could all spend forever talking about this. We all have stories. Unfortunately, when those failures happen, the CPA usually gets called. And I know for each of us, it's enjoyable to be a part of the plan to put the preventative measures in place. And then when something goes wrong, we're always able to come in and to help the owners to assess the damages of what has been done, and also to learn from what has been done to figure out what internal controls we need to put in place to try and prevent and deter. So Martin, I know you have one that's with the long-term facility. That's a good example. If you want to start with that one, and I'm sure it will spark the rest of us to share more.
Oh yeah, I just, I think about, clients trusting people too much. One of the hallmarks of a good internal control is having multiple sets of eyes on transactions, especially disbursements and receipts. And, I'm always surprised. We recommend all the time. We deal with internal controls when we audit companies. We look for internal controls. We evaluate controls, and we'll recommend those controls to clients, and then we'll find out through usually some just horrendous event, financially horrendous, that these controls we've recommended and suggested have just been overridden because, well, I've got to be running my business, and I've got my most trusted person over here, and they do a great job with the receipts, the payroll, the disbursements, and I can just wholly rely on them. And in fact, they don't even take a vacation. They're here all the time, every day. Well, my biggest example is where one of those trusted employees, who was responsible for payroll, hired their significant other who never really showed up at the facility. They were just ghosts on the payroll. And that same person kept giving them raises, promotions, moving them to different departments. And the people in charge of reviewing were just saying, oh, well, no, I trust her. And it turned out in a few short years that they had paid this ghost more than $500,000. And this wasn't a huge operation. They maybe had a couple of hundred employees, and there's $500,000 that goes out the door. In a very similar situation, person had the same level of responsibility, convinced everybody that they ought to take special checks, vacation payouts, and bonuses down to the local bank and cash those so that it'd be easier on the employees to just get that cash and hand it out to them. Well, of course, it was all made up. No vacation extra, no bonus. And it all came back. In more and more stories, it all comes back to trusting a person instead of implementing and following those controls that segregate duties and give those clients an opportunity to review what's going on. And from an outsourcing standpoint, we can be one of those separations, and we found some good results in that, not just in recommending controls, but in helping clients be that separation of duties.
Yeah, and what I've always found is, in addition to those processes, you can have great processes, and you're employing humans. Humans, when opportunity and need intersect, that's where fraud occurs. And so what I found is good data fast has been probably the most effective tool, because generally somebody who's trying to hide something needs a little time and a little deception to keep you off track. And we had a consulting engagement that by the second month that we were doing our monthly consulting calls with this client, they found out that their bookkeeper, who was the wife's best friend, had paid $40,000 in the past 2 years out of their corporate accounts to pay her mortgage, and she would just write the check in QuickBooks and to the mortgage company, and then go back into QuickBooks and change the payee and as to some common vendor. And because we were forcing the owner to review profitability data on a monthly basis, he looked at in that second month, he said, we didn't spend that much in that category this month. So drilled down on the item, and all of a sudden everything came out at that point. The other example is the human rain delay. We had a client who had a controller, I actually called him the CFO, and this person, always talked a good game, but she kept, there was always an excuse as to why the data was later and later and later. We were generally not getting data to analyze the previous month's performance until, the third, fourth week of the month. And come to find out, I mean, she was cutting extra payroll checks to herself and kind of taking time to move stuff around to keep it out of sight, but, eventually you get caught. But, my antenna goes up anytime that people say, oh, I need until this date. I'm sorry. When I was a young controller for a $140 million bank, and I got hired away as a bank auditor to work for the bank, and my predecessor reliably delivered bad data the day of the board meeting. And and I looked at it and I said, okay, well, let me fix this. And I with a first generation PC and floppy disk to spread the files around, I delivered accurate financials by noon of the first day of the month. And it was just a question of working your way back, because if you deliver data that fast, you ain't got time to cook it. You got to be right.
Yep.
Well, all right. So I am going to go ahead and post the last polling question. And then we have a couple of questions that are out here from people in the webinar. So as an owner, do you believe that your internal controls are sufficient, and do you have confidence in them? So we're going to launch that poll, and the answers are no, or neutral, I'm not sure, or yes. And I actually have one that I was a part of that was really surprising to us. We were doing the accounting services, and it was a concrete company. And those ready mix concrete trucks, they go all over the place. And we would do the analytics and look at things. And one year we brought up that the revenue and the costs weren't aligning, they weren't correlating. And the owner said, oh, no, it must just be a timing thing. It's not anything that anybody should be worried about. And so then the next time period went by, and we same problem was coming out in the analytics. And well, by the second or third time, he kept saying he trusted all of his employees. He trusted what they were doing. And he said, we need to, he started thinking about it. Well, then he had a customer call in, because that customer felt uncomfortable because he had paid cash for his concrete. And this gentleman knew it was all paid by invoice or credit card. So he called us, he went up in a helicopter, and they took an inventory of where all their trucks were, because they're numbered on the top. And found that 20% of his fleet were not on jobs that he knew about. And
Wow.
a lot of those costs were figured out by the volume of the concrete. And he determined that his plant manager was redirecting those loads to places that were willing to pay cash for their product. Over 2 years, almost $800,000 in product. So it can happen. You have to be careful about that trusted word. And I also tell the accountants and bookkeepers internally who, it can feel like when someone says you need oversight, that's a scary thing, or why are you looking at my stuff? But really, for the bookkeeper and internal accountant, having the records reviewed or looked at, and some of that oversight and making sure those bank recs are looked at by another person, that protects you as much as it protects the owner, because it's a level that, you know, you did the work, and if you're doing what you're supposed to, there shouldn't be a problem. So I know for me, when I have a bookkeeper really push back on me looking at something, that tends to send all the red flags up, because it makes me think, well, why do they not want me to look at it? So,
Well, you have to look at things too. I remember we had a client in the medical equipment rental space. They're in respiratory rental, and they had taken some oxygen concentrators off service because they'd gone to a newer version that had remote telemetry that they could connect, you know, via phone line, you know, into it to monitor it, to not have to go out. But they had all these old concentrators, you know, in their warehouse. And I said, well, ever any concern that those will get legs and walk away? Nah, no problem. Sure enough, about a year later, to come to find out, they one of their location managers was on vacation, and somebody called in and had a question about a payment, and it came out that that person was paying cash to the location manager for oxygen concentrators. And it's like you just don't think people will do those kind of things, but you know, like I said, where you've got idle equipment, idle resources, or things that aren't being watched, people will find a way to convert them to opportunities. You know, you got things like eBay where they can take idle pieces of equipment and those things and disappear and just, you know, be sold. And so those are all those things that you just got to be mindful and say this is a different environment, you know, than 30 years ago that you got to watch out for.
okay, so I have a couple of I mean, we've got a lot of questions that have come in that we can take a look at. We'll get through the ones that we can. The first one is an interesting one. Do any of your clients use offshore resources for lower level activities to speed the timing of close? I know, like for me, we have some clients that are in the medical area, and they do a lot of their medical billing. They do tend to send to offshore. Um, I know just recently we had an issue with it because they got 3 months behind in cash flow. So, you know, wherever you use it, you do have to keep up with it. It's just a matter of who's doing the work. I know for me personally, we do the work here. I want to be able to talk to my bookkeepers and accountants and know what's being done and interact with them. Greg, Martin, do
I,
you have any thoughts on that question?
I've had limited success. Actually, I was talking with a client this week. They're in the property management space, and they were using some resources in India to do some of the detail work. And it's been, you know, hasn't been great, hasn't been awful. You know, we've had a few situations where people tapped into Philippine company support, and once again, you have to deal with international risk. You know, so you know, Philippines had a much more significant COVID lockdown. The country's not as structured for remote work. One of my clients, though, is in they have call centers, and so all of their call center people are actually in India. You know, but they were ones that were actually quite successful. Even India struggles a bit with remote work, but these guys were actually able to do all their call support and transition, which has kind of opened up a new business model for them. But I would say that the success and failure is not universal. So it's not something that I'm against looking at, but you've got to be careful. You've also got to be careful. We've had clients that have like gone direct to contractors in the Philippines and didn't go through an agency. Well, you're actually still responsible as a contractor in the Philippines to pay their Social Security medical benefits piece, and they got surprised with the government tracked them down and back billed them, you know, for that. And so you've got to understand, you know, international sounds great until you start looking at all the details and you say, okay, it works in certain circumstances, but just be careful as you evaluate it.
Yeah, I mean, you know, clearly there can be some cost savings, and lots of those folks are very technically competent, but it's much harder for them to know your organization and understand your organization and be able to help your organization achieve their goals. So, I mean, it's really, you got to think about those resources most of the time as just purely mechanical, and is that really the best option? Or maybe can we automate and then have somebody that can put their eyeballs on my organization and see what my organization is doing and tell me when there's opportunity.
The typical situations where it's worked, especially because of time zone differential, is where you need raw data gets produced every day that needs to be manipulated to then be used by your team the next day. And that's really where that time, it's actually not so much the international talent, but the time zone shift, because it's easier to get them to do it during their natural business day for you than you trying to staff a third shift of something.
So another question is, how do you deal with time and billing issues for service businesses with projects? I mean, I know I can answer to this. Generally, we have a time and billing system that's outside of our accounting module, and it integrates with the accounting and pulls in by project, and we're able to pull a profit and loss by project so they can see how their project is profitable or not.
Yeah, for simple projects, our zero accounting has a built-in project management, but it also connects with, some 800 other applications, and there's some much higher level project billing softwares that connect in as well. And projects are unique, and you quite often need a project billing management profitability type application to help you understand what's going on with those projects.
Yeah, so this is kind of core to our simple numbers philosophy. So, one of the key things that we're known for, if you ever heard the term LER, you'll know that they're talking about simple numbers. So LER stands for labor efficiency ratio. And so we believe that the number one driving force to make a business profitable is labor efficiency. It's not about cutting labor to a cost. It's about getting output of what you spend for labor. And to be able to do that, the biggest challenge is to get people to start tracking time. And this is a case where there are project management systems out there like Harvest or some of those that are used in the marketing world. Those track time, but they don't connect value. And so one of the things that I would say is, and we've done a lot of work suggesting systems for our clients who have this need, like the system that we use for CRI and we used with our firm before we merged. These are systems that actually not only do you put your time in, but you have a theoretical value of that hour, but then what ultimately gets billed connects to that person's hour and writes it up or down. So I don't even have to bill by the hour to connect the time, because the time is a cost accounting measure. It's not a value. One of the things, and I will say this, when you bill by the hour, there's only two possible economic outcomes. You either give away your expertise or you charge for your ignorance. And so there's not an economic equilibrium for billing hourly. And so the idea is we try to get people to bill for value, but you still got to track time, because that time is the cost element. And to say, did I hit it on this fixed price engagement? Did I miss it on this one? And then I can learn from those patterns and improve it. But if you don't have that time and billing system, like Martin and Christy are talking about, you're not going to have that data. And that is, for a service project-based business, it's essential if you want good segment reporting.
Well, I know we could go on and on, but we're at the end of our hour. So I'm going to switch us over, and I want to thank Xero, who is our sponsor. You might have noticed that today's virtual panel is powered by Xero. Xero is a cloud-based accounting software tailored for your business. What does that mean? It means that your data is accessible anytime, anywhere, on any device. Learn more about how CRI and Xero can propel your business forward by visiting cricpa.com/Xero. I also want to share with you, these are Greg Crabtree. As mentioned earlier, Greg Crabtree is the author of Simple Numbers, Straight Talk Big Profits, and Simple Numbers 2.0, Rules for Smart Scaling, which was just released in November of 2020. These books are written with a goal to help you understand your data and numbers in order to create opportunities for your business in the long run. I also would like to share, we have a couple of upcoming webinars. On January 19th, we have COVID CARES Act, how to account for it and pass the single audit. January 27th, surviving in a tough economy, cash protection strategies during an economic downturn. And on February 3rd, Gone Fishing, Don't Fail the Test Against Social Engineering. You can sign up for all of these free webinars at cricpa.com/events. And you can also connect with CRI CPA on our social media. You can follow CRI on all of the listed networks here at CRI CPA. We also invite you to sign up for our monthly e-newsletters and alerts on our website, cricpa.com. And I want to thank everyone for being with us today and listening to Greg and Martin and I go through our stories of the things that we've seen. This is our contact information. And then there were some questions at the end that we didn't get to. We'll make sure to respond to you. Feel free to reach out to any one of the three of us if you have any questions or would like further services for CRI. We would love to help you. Thank you.